If you are a freelancer who has touched crypto in any way, whether you got paid in Bitcoin, traded Ethereum on the side, or received a few stablecoins from a client overseas, there is a brand new IRS form coming for you this tax season. It is called the 1099-DA, and it changes everything about how crypto gets reported to the IRS. I am going to break down exactly what this form means for you, how to handle crypto on both Schedule C and Schedule D, and the record-keeping mistakes that will cost you thousands if you ignore them. Let us start with the basics. The 1099-DA stands for Digital Assets. This is the first time the IRS has created a dedicated form specifically for cryptocurrency and digital asset transactions. Before this, crypto exchanges were issuing 1099-Bs, or sometimes nothing at all. Starting with the 2025 tax year, which you are filing right now in 2026, brokers and exchanges are required to send you a 1099-DA reporting the proceeds from your crypto sales. And here is the critical detail. For this first year, they are only required to report proceeds. They are not required to report your cost basis. That means the IRS will know exactly how much you sold crypto for, but they will not know what you paid for it. If you do not track and report your own cost basis, the IRS will assume your basis is zero, and you will owe taxes on the entire sale amount. That is a nightmare scenario. Starting with 2026 transactions, brokers will report both proceeds and basis, but for this filing season, the burden is entirely on you. Now let me explain the part that trips up almost every freelancer. There are two completely different ways crypto shows up on your tax return, and you need to understand both. The first is crypto as payment for services. If a client pays you $2,000 worth of Bitcoin for a website you built, that is not a capital gain. That is ordinary freelance income. You report it on Schedule C at the fair market value of the crypto on the day you received it. You owe income tax on that amount, and you owe self-employment tax at 15.3% on that amount. It is treated exactly the same as if the client sent you a check. The fact that it arrived as Bitcoin does not change anything about how it gets taxed as income. The second way crypto shows up is when you trade it. Let us say you received that Bitcoin worth $2,000 in March, and by August it had grown to $3,000 and you sold it. The original $2,000 is your cost basis, which you already reported as income on Schedule C. The $1,000 gain goes on Schedule D in Form 8949 as a capital gain. Because you held it for less than a year, it is a short-term capital gain and gets taxed at your ordinary income rate. If you had held it for over a year before selling, it would be a long-term capital gain, taxed at either 0, 15, or 20% depending on your total income. This distinction between short-term and long-term can save you a massive amount of money. Let me walk through a real example. Say you are a freelance graphic designer earning $85,000, and $20,000 of that came in crypto payments throughout the year. You also did some trading on the side and had $5,000 in gains. Here is how this breaks down. The full $85,000, including the $20,000 in crypto payments, goes on Schedule C as business income. You take your business deductions against that. Then you owe self-employment tax of 15.3% on your net self-employment income. Separately, the $5,000 in trading gains goes on Schedule D. If those were short-term gains, they get taxed at your ordinary rate. If long-term, you get the preferential rate. These are two completely separate streams on your tax return. Now let us talk about the record keeping that will save you. Since brokers are only reporting proceeds for 2025 transactions, you need to document your cost basis yourself. For every crypto transaction, you need to know the date you acquired it, the fair market value on that date, the date you sold or disposed of it, and the sale price. If you received crypto as payment, your basis is the fair market value on the date you received it, which should match what you reported on Schedule C. You also need to pick a cost basis method and stick with it. The most common are FIFO, which is first in, first out, meaning you sell your oldest coins first, and specific identification, where you choose exactly which coins you are selling. Specific identification usually gives you the most control over your tax bill because you can strategically sell coins with a higher basis to minimize gains. Here is a mistake I see constantly. A freelancer receives Bitcoin as payment. never reports it as income on Schedule C, then later sells it and only reports the capital gain. That is wrong in two ways. First, you failed to report the freelance income, which is both an income tax and self-employment tax issue. Second, your cost basis is wrong because it should be the fair market value when you received it, not zero. If the IRS catches this, and with the new 1099-DA matching, they are much more likely to catch it, you are looking at back taxes, penalties, and interest on both the unreported income and the incorrect capital gains calculation. A few more things you need to know. If you converted one crypto to another, like swapping Ethereum for Solana, that is a taxable event. You owe taxes on any gain at the time of the swap. If you used crypto to pay for a business expense, that is also a taxable event. And if you received crypto through mining or staking, that is ordinary income at fair market value on the date you received it. My recommendation for every freelancer dealing with crypto is simple. Use a crypto tax tracking tool like Coinly, CoinTracker, or TokenTax. Connect your wallets and exchanges, and let the software calculate your gains, losses, and income. Then export the reports and give them to your tax preparer or import them into your tax software. Trying to do this manually with a spreadsheet works if you have 10 transactions. If you have 100 or more, you will make mistakes. The 1099-DA is not something to fear. It is actually going to simplify things in the long run once brokers start reporting full cost basis in 2027 for 2026 transactions. But right now, in this transition year, the responsibility is on you. Track your basis, separate your freelance income from your trading gains, and make sure every crypto dollar shows up in the right place on your return. If you found this helpful, subscribe and hit the notification bell because I release new freelancer tax strategies every single week.